Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Jim, today I'm going to try to do a review of all the 26 members of the Favorites collection, how they did in September and where they are headed next.
How did the Favorites collection perform in September?
The 2025 Favorites Index is up 183% as of September 30th, and much of that gain happened during September. I'm carrying the 2025 Favorites collection into 2026 rather than start it all over again. And the reason is that we're not yet dealing with a rising tide lifts all boats metaphor. That's going to start happening sometime late next year when the market's no longer worried that this is a two-inning game that's going to be rained out by a lightning storm. That fear has to vanish. It will take a while for that to happen. The real metaphor to think about right now is one I've mentioned before, and that these are all these juniors. They have been moored at the dock in a safe harbor, afraid to go out into treacherous seas where there are hostile, algo traders exploiting the unique structure of the news event nature of the resource juniors, and of course a financing network that's obsessed with warrants, come free trading, clip the warrant for a free lunch and pound the stock out. This has made it a very difficult environment because this bear market started way back in late 2011. So what's happening now is individual boats are gearing up and putting out to sea, and there is an audience emerging out there in the sea thinking, okay, which of these boats are going to find riches that will reward us? But it's going to be a selective and gradual thing that happens. And so we're dealing with a set of favorites. Some have done spectacularly well. Most have done sort of okay, maybe 100, 200%. And there's a whole bunch that are still behaving as if they're waiting for the signal to put their boats out to sea. And I think that means even though it's up 183% as a group, I think as a whole, by this time next year, this will have a staggering return.
What Favorites theme led to this outstanding gain?
You obviously look at gold, it's bumping at $4,000, and you think, okay, this is what's driving the juniors. But in fact, it isn't. And I mentioned this in the last Kaiser Watch audio episodes. It is the critical metal space that has delivered the great gains. Now, I have three companies in the Favorites collection that classify as true critical metals. They are PMET Resources, Inc., which is up 14%, Aclara Resources, which is up 476%, and Sunrise Energy Metals, which is up almost 2,200%. Now, a normal person would say, this must be because lithium, rare earths, and scandium have all gone to the moon. In fact, these metals are in the dumpster at prices where none of these companies' projects would be profitable if you developed them as mines and sold the output at the current prices. And most of these prices are at the moment China set. In the case of lithium, it is because there was a flood of supply that came when lithium crazily spent a whole year in the $30 to $35 per pound lithium carbonate range, and we have a bit of a slowdown in the whole electric vehicle build-out, not particularly helped by by Trump's hostility towards the whole climate change story and electric vehicles as a solution to that, and by Musk's decision to wreck the Tesla brand by becoming this right-wing crazy person encouraging alternative for Germany and groups like that to take over and kick out anybody who supports democracy. Now, PMET Resources changed its name from Patriot Battery Metals on September 16th, and I'm surprised that it did not change its name to Jackie Chuanan, which is the name it gave to the Corvette project in the James Bay region. Maybe they heard me calling it Jackie Chu for short and figured that probably wouldn't be good. Maybe Jackie Chan might complain that you're poaching on his brand. Now, PMET, when it did its PEA last year in 2024, it was in the money. It looked really good, but they used a lithium price that is double what it is at today. So technically, this should never be developed. Right now, it's at the feasibility demonstration stage. It is a world-class deposit. It will be one of the ones that go into production. It has attracted the attention of Volkswagen, which has invested money, and they see this as a supply of their of lithium for their future electric vehicle car fleets. And they also this year reported that there is a cesium zone inside the deposit. Now, cesium is a metal for which there is not much volume demand. It's a very expensive metal, but the uses that it has is very critical. And the Tanko mine, from which the world's cesium supply used to come from, it's basically depleted because it's not possible to continue to underground mine anything there. So there is a critical need to develop the Jackie Chu deposit, not just for the lithium, but also for the cesium down the road. So you have to kind of treat this story. It's my favorite vehicle for betting that electric vehicles will dominate the future and that the lithium-ion battery will be part of the future. Now with the big wet blanket that Trump's hostility towards electric cars hanging over this market, you would think that they would not do anything to help the lithium sector. But during the past week, we saw this unusual deal where the $2.2 billion loan offer that the Biden administration had made through the Department of Energy to Lithium Americas to help it with developing the Thacker Pass lithium deposit. This is a low-grade claystone-style deposit. It's large, but it also needs $10 plus per pound lithium carbonate. Well, the news just came out that they're going to put up a significant amount of money, and this is General Motors is the big partner, and they're hoping to get its future offtake. So instead of scrapping this $2.3 billion loan, they've done a deal where they're going to acquire a 5% equity stake in the company eventually when they convert all these advances, and also a 5% project interest. So even though there's all this high-level hostility towards the electric vehicle sector, the various government agencies are looking at electric vehicles. We can't just make ourselves vulnerable to importing lithium from around the world. We're going to support this. Now, in the case of the Aclara, what makes it special is that the Carina ion absorption clay deposit in Brazil has an important amount of dysprosium and terbium. These are the heavy rare earths that are needed in the regular rare earth magnets to keep those magnets from losing their magnetism at high operating temperature, which of course makes them interesting to the Department of War, as the Defense Department is now called. Now, this project's located in Brazil, and Trump had his hissy fit about them prosecuting Jair Bolsonaro with regard to his insurrection efforts, and so he slapped this 50% tariff on Brazil, even though America has a trade surplus with Brazil. And so you would think, well, Carina is out of bounds. Yet, what we saw was that the U.S. International Development Finance Corporation is going to provide $5 million U.S. for a future right to convert this into an equity stake and to have a right to provide funding for its development. Now, we saw recently that the U.S. Department of War gave $400 million to MP Materials to build a magnet factory in the United States. But even more importantly, they guaranteed a price for neodymium and praseodymium, the light rare earth that Mountain Pass produces, at double the level of where it is trading now in China. So they're realizing we have to make sure that these future mines that aren't in the money do get developed. But as part of the deal, they're getting a 15% equity stake in MP Materials. And, how they're going to deal with this Brazil situation, I don't know. The Europeans are in pain because the dysprosium and terbium, they are part of the dual-use export restrictions that China has implemented. And China is going to be as capricious as the Trump administration and changing its mind and making false promises and all this kind of stuff. So the rest of the world realize we can't rely on China in any way until this geopolitical turmoil and tariff turmoil is out of the way. And most realize this is not going to change anytime soon. So Aclara is rising because it's in the middle of this feasibility study, and it can probably develop this faster than some hard rock rare earth deposit. And because it can scale this thing quite large, it could be a major supplier of not just the regular neodymium and praseodymium that's present, but also these relatively scarce terbium and dysprosium. And then, of course, there is Sunrise Energy. It's the top performer because on September 15th, the U.S. Export-Import Bank submitted a letter of intent to fund U.S. $67 million for the development of the Syerston scandium deposit in New South Wales of Australia. Sunrise is any day now could report the results of an updated feasibility study that it is doing. This funding promise would be about half of CapEx. No doubt the United States will want a supply of scandium for its military use because scandium is also part of this dual-use restricted export restriction list that China has created. And when you look at the price, the value of Sunrise, on the plan, the output for the Syerston project, the stock is way overvalued. But I published on the 17th, I published a comment where I argued that this is really a pilot plant. It secures the critical needs of various military organizations, such as the Department of War. But it also cracks the chicken and egg problem where you get this thing up and running, you show that it works, you fine-tune it so that it does work better, you learn how to do a scaled-up version, and when the end users that are commercial, that don't need the aluminum scandium alloy for some specialized military needs, when they see that this works, and they can see that Sunrise could scale this up and get economies of scale and be able to sell scandium oxide at lower than the sort of $1,200 price that I suspect it's going to use as a base case in the feasibility study, which happens to be about double what the China price is. But the China price, you place any order for size, and you're not going to get scandium oxide at $630 a kilo. So again, an example of where the China price discourages Milton Friedman type thinking of free market economics and globalization. So we are now in a post-globalization world. Everybody's looking at this from a new frame. They're looking at offtake agreements that have to be higher than the China price. And if Syerston ends up getting built, this will certainly allow a valuation much higher, and it might even create hope for one of the members of my bottom fish collection, Scandium International, because Sunrise is going to become the CBMM for scandium. That CBMM is via the Araxá project for niobium in Brazil. It dominates 80% of global supply, but end users don't really want to be reliant on a single pinpoint source of supply. So the price is such that we have the Niobec mine in Quebec, which provides a portion of the world's supply. And if there's ever a temporary problem in Brazil, well, that can end up bridging the gap. It prevents a monopoly from becoming a point of vulnerability. So the Scandium International stock has crept up because people think, well, this thing's supposedly shovel-ready. It does need an updated feasibility study. Maybe somebody will come in there and grab this and develop it as a sort of second fiddle to the main fiddle, which will be Sunrise Energy's Ryerson project.
Are American investors starting to take gold seriously?
You know, something very interesting has happened in the past couple of weeks. Now, from September 3rd through 17th, the GLD ETF had 11 continuous trading sessions, losing ounces for a total of 2.2 million ounces, even while gold almost on a daily basis made new highs for an overall gain of $153 per ounce during that period. Then from September 19th through 30th, the GLD had 8 straight trading sessions of ounce gains for a total gain of 4.7 million ounces, during which period gold gained another $182. Now, this is not a record for the GLD ETF, which has been around since 2006, but it is the biggest streak since gold started its uptrend in February 2024. Now, the GLD ETF is liquid, and it's easy to buy and sell, so it is the go-to for anybody who wants to have exposure to physical gold, and it is backed by physical gold. And the reason it loses ounces and gains ounces is because there's an arbitrage mechanism designed to prevent the ETF from trading at a premium, too much of a premium, or a discount to the price of the physical gold in the bullion market. So when there is buying pressure, it ends up gaining ounces. When there is selling pressure, it ends up losing ounces. So this streak of gaining ounces is a powerful signal that North American investors are finally taking gold seriously. Now, we haven't seen any decline in crypto. Rather perversely, I think what we're hearing is that gold is the new Bitcoin. But this is very, very interesting what's happening. This is a significant sea change in the North American attitude towards gold, and it bodes very well for the sector that I care about, which is the juniors.
Are the gold producers still regaining their role as leveraged proxies for gold?
Jim, you bet. My 2020 gold producer index is up now almost 200% as of September 30th from the starting date on January 1st, 2020, while gold is up 151%. I've been sort of watching for this in the past couple of months, saying, when the index trend line punches through the gold trend line, that's when we're starting to see the market take gold seriously. And in July there, when we saw all the earnings reports for the second quarter, and that became a change. That's when the market saw these companies are raking in a lot of cash flow. And it's interesting, even Barrick and Newmont, the world's biggest gold producers, their index trend lines have also punched through the gold trend line. And strangely, this week we saw that Mark Bristow, who was supposed to be around for another few years, was suddenly replaced as CEO by Mark Hill on Monday. And almost at the same time, Newmont announced that Tom Palmer would retire on January 1st and be replaced by Natasha Viljoen. And this is interesting. Why the change? Well, perhaps in the case of Barrick, they're not happy that they're investing in the Reko Diq copper gold project in Pakistan, of all wonderful places. And of course, they're probably thinking, what an untimely move to change the name Barrick Gold Corp to Barrick Mining Corp. But who really cares about any of this? The question is, when will the producers stop thinking about acquiring each other and start thinking about going down the food chain and going after juniors which have advanced ounces in the ground, especially ones that are permitted and virtually shovel-ready.
What do you mean that today it's not about thinking outside the box, but rather appreciating the new frame?
You know, my top gold favorites are Vista Gold Corp and West Vault Mining. And these companies have had projects that have been around forever. In the case of Vista Gold, Mount Todd surfaced in the 80s. It's been in production before. It's had all these problems. In the case of West Vault, Hasbrook has been around forever, and they would solve whatever technical problems there were. But even then, when they got their economic studies and feasibility studies done, the numbers were always just barely clearing the development hurdles at the prevailing gold price. And one of the things I realized, this is even a problem with myself. I've been now following this stuff for 40 years, this sector, and I have all these vague memories of projects that looked good for a while, but then faded away because they just didn't make it at whatever gold price ended up. And the fact that gold has been volatile, charging to $1,850, crashing back to $1,100, going to $2,400, going back to $1,800, and now it's at $3,800, $3,900. We just sort of remember specific things. For example, in the case of Vista Gold, people talk about the hard rock problem. And this was a problem when they first tried to produce it. They had the wrong equipment, and all of this has been identified and solved with the engineering, and the project barely worked at an $1,850 base case price. Similar thing with West Vault Mining. There was all these concerns about encapsulation of what is an oxide deposit, and this is supposed to hinder any heap leaching scenario. And again, all this stuff has been looked at and worked at, but these lingering memories, they're entrenched in the system. And normally say, okay, how do we solve this? Well, we got to think out of the box, come up with some new technology, figure out how to solve the encapsulation problem, how to deal with the hard high work index type of thing. But that's not required. What's happening now is this gold price move. I mean, if you take $400 gold in 1980 as the base and CPI inflation adjusted, it should only be $1,577. At $3,800 gold, that's 143% real gain, and this gain is only really about 12 months old. So people aren't yet thinking about gold as $3,000 plus, that it's delivered a real gain that's far beyond whatever inflation we suffered in the past couple of years. And so by adjusting to the new frame, go back to all these projects that you kind of remember as duds and rethink them from the perspective of where gold is now. And 3 months ago, everybody thought gold was just going to be a flash in the pan and crash back below 2,000, where when you look at Mount Todd, 1850, barely clearing the development hurdles, there's no room for error. Now there is so much room for error in a lot of these projects created by the price gold, especially when a lot of work has been done to solve the technical problems, know what it's going to cost to produce the output and what the recovery is going to do. So for me, in my bottom fish collection, I've got a number of companies that are these stories that I remember from before, and they're these dud stocks trading at cheap prices, and I'm now going through them and going through whatever recent economic studies they've done, and I'm modeling them in my discounted cash flow model, and I'm running the numbers at different gold prices, and a lot of them suffer from the stigma, you're only going to produce 53,000 ounces a year, which is roughly West Vault's problem. And yeah, that's kind of small. But yeah, if gold is $1,700, $1,800, it's small. But when the gold price is double that, all of a sudden, the cash flow that such a small mine would generate is not shabby at all. So again, thinking stuff through a different frame. And one of the ones that West Haven Gold Corp, they updated their PEA earlier this year. The market sniffed at it. I sniffed at it. But then I took a look at it a month ago and ran the numbers and said, gosh, even though it's only 53,000 ounces, this is worth a lot of money, a lot more than the sort of 15 cents that they're at. And it's still in the bottom fish collection, because what I'm waiting for is this 5,000-meter drill program they've got going on the Shovel Nose project. They've got 3 zones that they plan to develop. They've been sort of focused just on these 3 zones for the last 5 years since it was discovered in late 2018. That's what the PEA is based on. But now they got this search and destroy drill program going on to look for post-mineral fault offset segments of the main vein structure, and also for parallel basin-bounded fault structures that might also have been pumped with these low sulfidation epithermal fluids. And what the purpose of this is to figure out, okay, do we just focus on pre-feasibility study with the existing resource that we have, or do we have an additional story here where we can grow this thing, perhaps double the resource, make it a 2,000 ton per day scenario that's going to churn out 100,000 ounces. And as we're entering this bull cycle, money's starting to pile up on the sidelines and become available for stories such as this, especially ones where they can have continuous news flow. Now, we don't know yet whether what they have is all they're ever going to have, or whether this drilling is going to suddenly turn this into a hybrid story where they can plot the feasibility demonstration, environmental studies, and so on for the main resource, but then start drilling like crazy. Now, here's an example of what this market has been suffering with. West Haven had to do a 12-cent unit financing through Red Cloud earlier this year just to get money. Later on, they got a nice inflow injection of about $3 million from Eric Sprott, who understands this stuff. And after a period where he seemed to be in a slump, he's finally acing it again. He's making these big investments. Unlike 2020, when everybody piled into anything that Eric Sprott touched, that isn't happening right now. That's why he's finally right. He's making the right decisions, backing things like this. But the investors still don't get it. On September 15th, when this private placement came free trading, the stock got pounded. It was up in the 18 cents, and like 6, 7, 8 million shares came out. And this was your Canadians doing the usual thing, clipping the warrant for the free lunch and dumping the stock. They're not yet looking at this through the new frame, which is $3,000 plus. My KRO 450 club, as I call everybody who's a subscriber of Kaiser Research right now. These are the people who won't have to pay $200 a month next year when I change the pricing system. I had them alerted. I showed them the numbers, and they were busy buying this while these people who don't yet understand the frame were doing the old thing of hedging their risk, clipping the warrant, and flipping the stock. So West Haven's one of the bottom fish that, it's 20 cents now. I'm not ready to put in the favorites collection, but that's the sort of stock where stocks in the bottom fish collection, which, by the way, it's up 122% as of September 30, and it has 113 members, and we keep adding them. We'll keep doing that through the rest of the year.
Why do you think continuous news flow is critical during the awakening stage of this resource junior bull market?
There are 2 reasons. One is opportunity cost. Now, with my metaphor of these boats at the dock, individually putting out to sea, you don't want to be aboard one of these boats and discover that it's going to sit there and be the last one to put out to sea. So, and boats that aren't, juniors that aren't in a position to flow continuous news, they're not really going to go anywhere. You need to be able to change the fundamentals. Now, when you're dealing with ounce-in-the-ground projects such as Vista Gold and Westfall, where there's nothing left to do other than wait for a buyout, those ones will track not just the trend in the price of gold, but the perception about how durable the new frame for gold is turning out to be. And the longer gold stays above $3,000, the higher stocks like Vista Gold and Westfall are going to end up going. And the closer the producers will come to saying, yeah, we can afford to do this, and our stock is in the stratosphere, so we can issue paper as currency, we're going to take them up. But the other reason is catastrophe risk on the big picture scale. I look at the general equity markets. There's all this rah-rah about, $55 billion leveraged buyout of Electronic Arts. Yeah, the deal cycle's coming. But, there's going to be no employment numbers this Friday because of the government shutdown. Don't know how that's going to resolve itself, but indications from private sources is the American economy is weakening. There's all kinds of inflation and health insurance coming down the pike. I go to the store and I'm like dumbfounded by the prices that I see for stuff like beef. I'm saying, this is going to be good. I'm not going to be eating so much of this stuff that's not healthy for me. So there's the danger that suddenly there's a big market slump, sort of like a September 2008 event where suddenly everything unravels. And that, of course, would crater any juniors that have managed to get up, unless they are able to keep producing news. And, of course, we're now seeing the financial sector. They're suddenly rediscovering the resource juniors, and we're starting to see these big deals, $10 million, $20 million, $50 million announced, and then they get upsized, sometimes within a day, sometimes within 2 weeks. But this money is going to projects where the company is in a position to spend it continuously, provide a continuous flow of information. The plague of the past decade, where you get a bit of money and you set up your sniper kill shot on some target, and then you wait 3 months for the results, and they're dud, and if they look okay, well, the algos are there to pound you down, because it's going to be another 3-4 months before the next news event happens. The market doesn't want this. So you need to focus on juniors that have continuous news flow. Now, this is affecting 3 of my favorites, and they are Arizona Gold and Silver, which is down 4% for the year, Endurance Gold Corp, which is up 76%, and Solitario Resource Corp, which is up only 17%. And the reason that they're not doing so well is because all 3 have to deal with permitting issues. Now, Arizona Gold has been stuck with 2 drilling platforms that the PLM finally permitted in June of last year. This summer, they chased the Philadelphia vein down dip to a point where they can see a mineralogical transition to more an Oatman-style mineralization. And Oatman is down the road about 15 kilometers, and it yielded 1.5 million ounces at an average grade of 28 grams per ton. Now, when they reported results a couple of weeks ago, they were good, but they weren't yet in that 1 ounce per ton range. And the stock went up, but it hasn't taken off like it should, because, they took a break in August. They're resuming drilling in October, but they can only, from this drill platform, fan holes to intersect the same depth. They're waiting for this 200-acre disturbance permit application, which has 16 drill pads to the east of the Philadelphia vein. And if they can get this approved by the end of December, then all of next year they'll be able to totally delineate the Philadelphia vein as deep as it goes. And the suspicion now is that the richest part of it is in the lower 300 meters of the 600-meter dip of this low sulfidation epithermal system, a depth that has never really been tested at this project. So the stock can't really scale up its news flow until it has this permit. which is frustrating for the market. Now, I think the stock will keep creeping up because if they can show there's a lateral continuity of this good mineralization with this next round of drilling, that will have the stock up. But the market, when the big money wants to give them $5-10 million at a much higher price, it's because they want to see a drilling blitzkrieg underway where the whole system, just give us results in batches and hopefully there's something new in there. We don't want to be focused on these sniper kill shots. Now, Endurance Gold has been drilling at Reliance since late May. It has put out a number of news releases. They have been good holes, but it's a single rig. The season is May to November. They did not raise any money this year because they had some left over from last year, but they did get $2 million selling their Inventus stock position to Eric Sprott. But this is an example of where management is still caught in the sort of bunker mode that was created by the bear market of the past decade. They're very cautious. They do not want to overspend. And the problem is the market wants aggressive drill programs, but they don't really want to finance here at 20-25 cents, which is better than what it was at the start of the year. And they could attract an audience if they could get the permit for the northeastern part of the Reliance project. Last year, they stunned everybody by doing the advance payments, accelerating all the vesting requirements so that they could consolidate at 100% our Reliance project. In the northeastern part that they call Olympic, there are some structural trends with interesting soil values at surface, which could be a repetition of what they have at the Treasure Shear. And this is lower elevation, so they could drill this much earlier in the year, but they can't until they get the permit, and that's plodding through British Columbia system. Now, Solitario retreated in the past month because they reported disappointing results for the in mid-September, for the 7 holes that they drilled on the Golden Crest plan of operations in South Dakota. Now, those drill platforms, they were selected 3-4 years ago. It took the U.S. Forest Service 2 years to approve them. They're basically for scout holes. So far, the scout holes have delivered smoke here and there, but even drilling from them, you can't really vector in. They're going to have to apply for a whole new modification to do this. And they're doing gravity surveys at the recommendation of Newmont to see what's better going on at depth. But the real focus needs to be on Ponderosa, where subsequent sampling revealed, here's an area where the gold values and Pathfinder values are not subtle at surface. They are really, really good, and they're stretched over this east-west trend, and they created a drill platform plan that would basically cover any possible location for a major gold system, and they thought they would have it by May. No, the U.S. Forest Service dragged its heels. Now they were hoping to have it by the end of September. They have maybe a week or 2 weeks left to get the permits so that they can mobilize the drill, because they got to be out of there by early December. So the results sucked from what they did drill on the Golden Crest plan of operations. If they can get a rig going and start drilling and show that this gold at surface has all kinds of zones at depth, then the story goes live. But because of this heel dragging by the U.S. Forest Service, we may have to wait until May of next year for drilling to resume on this project. So the market is aware of these obstacles to news flow, and it is preferring to avoid stories where you cannot organize a reasonably continuous flow of fundamental news.
Why is the cone of silence starting to worry you about Quartz Mountain and PGX Resources?
Well, PGX Resources is unchanged for the year. And Quartz Mountain is up only 5%, though it has been higher. Both have very important drill programs underway, but we are hearing nothing about them. And that's usually not a good sign, not a sign that good news is imminent. PGX is trying to find a Sullivan analog at its Dewdney Trail project in southeastern British Columbia, Sullivan was a world-class 150 million ton zinc, lead, silver, SEDEX-style deposit. We got excited about this play in late 2023 when they found massive sulfide high-grade boulders in the talus at the base of a mountain, which had the same sort of seabed exhalative textures as Sullivan. So we said, oh, this must have spilled out from this layer cake somewhere. Well, they did the drill program last year and discovered that the layer cake has been complicated by folding and faulting. So they designed a new strategy to go in there this year to try and figure out where the vent and the pile, the MS pile are for this system. And they announced that drilling was underway by July 31st, yet 2 months later, not a peep from the company. So that's telling me, especially with something where the visuals in the box tell you that you have something, PJX's Dewdney Trail project is shaping up for a bust. Now, Quartz Mountain did a phase 2 program earlier this year about which they were quite excited, but the market was not so excited by the results. They drilled all the holes into the Prodigy target at Maestro from one direction, and while they got gold and silver smoke all over the place, they did not get grades comparable to what Artemis Gold has at its Blackwater project, which the Maestro target is an analog. So they went back in there with phase 3, which was to drill this system, this target area from different angles to try and figure out what are these structural controls within the system for gold so that they hit the gold veinlets and that perpendicular and get a proper assessment of what the gold content is. We got our news release on August 11th that 5 of 7 holes had been completed and nothing since then. And again, when it takes that long to get assays, it's not usually a good sign. So both of these PJX resources and Quartz Mountain resources, both of them will have a winter downtime coming up. And if this news flow that we get is not good, these are not going to be, favorites that drag up the favorite collection index.
Why does Canalaska Uranium keep rising despite no news?
CEO Corey Bellick has also pulled a cone of silence around the West MacArthur Summer Drill Program, which began on June 17th. Now, on July 17th, they dazzled the market with geochemical assays of very high grade, except it was for winter drilling for which they had already reported radiometric EU308 readings. And the radiometric readings, they have an upper limit. And when the uranium gets a way up their grade, you need the geochemical assays to tell you that. But in terms of what they've been encountering there, why no radiometric assays from visuals in the box? Is it a change of policy? And they're now in the pipe zone. The drilling that they're doing this summer is to stitch it all together and get, eventually produce at least a starter resource estimate so people can see that it's hanging together, can start crunching the numbers and see this is a MacArthur clone. And despite the absence of news, the stock has been creeping up. It's up 71% for the year. Now, uranium price, which got into the low 60s at the start of this year, has rebounded. It's about $82, $83 a pound. And I'm happy to report that the World Nuclear Org has finally updated its production figures for both 2023 and 2024. And it's interesting. We can see that the slump in uranium production has rebounded. Kazakhstan, of course, still dominates. But Canada in 2024 had the biggest production ever in the history. And all of it comes from the Athabasca Basin, these targets, these mines and facilities on the eastern flank of the Athabasca Basin. So I think Canalaska Uranium is going up because the infrastructure is near the West MacArthur property. There will eventually be depletion. And frankly, Canada at 24% of global supply compared to Kazakhstan at 39%. And you know that when push comes to shove, Kazakhstan supply will go to Russia and China, not to the global West, not to America. So Canada is really the future supply, reliable supply of uranium for the rest of the world. And there's been a lot of talk about, let's get on with developing more nuclear energy power capacity. So all of this is helping breathe life back into the uranium sector. But it would be nice to get an update from Canalaska about what they are or aren't accomplishing at the West MacArthur project.
Are copper and nickel prices helping out Faraday copper and FPX nickel?
Faraday copper is up 143% this year, and FPX nickel is up 45%. Now, copper had a confusing period not long ago when it appeared that the United States was going to impose a 50% tariff on all imported copper cathode. And that didn't really make a lot of sense because any copper stuff made in America that relies on imported stuff is going to end up costing more. So how is that good for this, make America great again strategy, reshore manufacturing? But even dumber is that some of the copper production in the United States gets shipped overseas as copper concentrate and then comes back as copper cathode. So all of a sudden, the government would be reaping a 50% royalty off the top of this copper. This made no sense, but it did cause the COMEX a special futures price to go up to around $5.50 a pound, while the LME price stayed at around $4.50 because the rest of the world was still trading copper with rational expectations about supply here and there. Well, when they finally clarified that this dumb idea is gone, the COMEX price has dropped back to $4.50, and so we're dealing with a sort of $4.50, $4.60 level, and that's better than the below $4 we had a couple of years ago. But that's not what's driving Faraday copper on. While all this tariff stupidity was happening, they managed to raise $49 million for the Copper Creek project in Arizona. Now at $4.50 copper, the PEA they did in 2023, it's in the money. But there's also exploration potential there, and they finally got a critical BLM permit to do drilling, not just continue doing definition drilling to upgrade to the PFS, the existing resource, but to also allocate 10,000 meters to testing all these peripheral targets that they have developed over the past few years. So we have a dual story here where we have a copper project that's marching through the feasibility demonstration cycle, while simultaneously there is now well-funded exploration drilling that could end up finding something bigger and better. And this is the old Oyu Tolgoi story. Friedland acquires this marginal open-pittable resource from BHP in Mongolia, and he ends up being right in two ways. One, he's right about the China supercycle dragging the price of copper up so that even the open-pittable thing becomes viable with the grade that it has. But as they snoop around in the general vicinity, they come up with the much, much richer copper-gold Hugo Dummett zone, which becomes this underground world-class mine. So Faraday copper is rising because people are hoping that a Hugo Dummett type miracle will happen while they see the value add come from $4.50 copper grinding higher. In the case of nickel, the nickel price is still below $7 a pound. It is below what FPX nickel needs to make its Dakar PFS viable. Its base case price was over $8 a pound, and it's been stuck in this 22 cents to 28 cent rut, but it started going up recently. It touched 37 cents. And the trigger seems to have been a September 16th announcement that Canada's Critical Minerals Infrastructure Fund is going to give them $3.5 million to cover half the cost of doing studies related to an access road and an electrical transmission line. Now this is peanuts compared to what the feasibility study would cost. But I think the reason that the stock has gone up is this funding is a signal by Prime Minister Mark Carney, who realizes that if Canada is going to stay an independent nation, it needs to boost its resource and infrastructure development so that it remains relevant to the rest of the world. And the Car project has been clouded by one First Nations band, the Platson, which a couple of years ago decided that it no longer wanted to keep pocketing the payments from FPX Nickel, suddenly discovered that this Mount Sydney was sacred territory. And the other First Nations bands in the area, they were all okay with this happening. They want this mine to happen. It's also part of the clean energy future because it might even end up being carbon neutral when put into production. And I think, and the project has been backed by Japanese investors, and then they're sort of wondering, is Canada going to let this UNDRIP aristocracy call the shots on anything? Well, this puny little $3.5 million payment is kind of a signal that we're not going to let one little band trumpet, be the squeaky wheel that gets all the grease. These times are over. This is a signal that we need to develop these assets, make Canada great again, because the United States wants to destroy Canada's economy, and this will happen through the tariffs that the United States has imposed on Canada. So Canada has to go back to its resource base, and it cannot let UNDRIP be the obstacle that causes Canada to become a nation of serfs to America.
Are copper gold juniors like P2 Gold starting to get market respect?
P2 Gold was part of my January MIF conference group. It was the cheapest company there. It was not in great financial shape, but it's now up 308%. And most of that gain has come since July, when the market started to believe that the price of gold is not going to crash back below $2,000. Now, P2 Gold spent the first half just treading water while doing metallurgical studies for the Gabs Copper Gold project in Nevada and waiting for the BLM to approve a permit to allow the drilling that is needed to upgrade the resource for PFS level, get the pre-feasibility study underway. And it was kind of funny, Ken McNaughton and Joe Osinick, they were the heroes behind the $3.7 billion Pretium buyout by Newcrest in 2022. And they launched P2 Gold as Pretium 2. But the market instead decided to downgrade them to zeros, and this forced them to reach into their own pockets. And I think they put like $6-7 million to keep this company alive. And all of a sudden, on September 3rd, they announced a $6 million unit financing at 20 cents, and then it got upsized to $11 million on September 15th. This is because people are now plugging $33,000 plus gold into the PEA's DCF model and saying, wow, this project's front-loaded with gold from the gold-enriched oxide cap, which they are going to heap leach. Yes, it blows fully diluted up to $317 million, but when you assign this the $1 billion Canadian target outcome value, this pricing of the stock now at 25 cents, it is still good speculative value. It is below the fair speculative value range. And one of the things these guys will be able to do as they resume drilling is sometime next year start drilling some of these deeper scout holes to assess this system. This whole project has never seen deep holes. It's got this three sort of separated deposits. I don't think the geometry of this system is yet understood. So similar to the Faraday copper thing, as there's now finally a lot of money available, they can do the boring feasibility demonstration stuff and start drilling these deeper scout holes to show that there may be something even better. Yeah, it might not be within reach of open pit mining, but if it's high grade enough, well, then you can do a block caving scenario.
What's happening with the Toodoggone Rethink Favorites?
A-Mark Resources and TDG Gold Corp were graduates from the Bottom Fish Collection in February of this year after A-Mark announced the Aurora copper gold discovery at its Joy project in which Freeport can earn up to 17%. They had already managed to deliver 300-400% gains from their starting of the year bottom fish prices. So they haven't really done an awful lot since then, but that started to change in September when the news flow from the summer work programs began. TDG is up 165% after reporting assays for the first hole on Baker Shasta, just to the west of the Aurora border, which confirmed that, yes, the Aurora enriched gold-copper system does extend onto the property. They now have 2 rigs at work. They're stepping to the west. We have to see how far west this zone projects. But they've also got a permit for a deeper hole just farther to the south, where there is a sort of 800-meter deep IP anomaly. They call it the deep IP anomaly. Now, this could just end up being pyrite, which, okay, if that's what it is, then we don't need to worry about it further. But if it ends up being part of a big system, this could be an underground mineable block caveable system. And again, the Oyu Tolgoi analogy, you have something at surface that's interesting, but you go deeper, all of a sudden there's something much more fantastic. Now, it could turn out that the Aurora extension does not extend very far to the west, and it could turn out that the deep IP anomaly is nothing, but there is the existing Shasta system, intermediate sulfidation gold-silver system that's been the focus for the last 40 years for this project, and these are usually peripheral to major porphyry systems. So if I were to bet on which way the results are going to swing, I'd bet on a positive outcome rather than a negative outcome. Now AMARC is up 113% after Freeport finally confirmed that it will step up to spend another $75 million towards earning 70%. That was a relief for AMARC because they would have had to fund 40% of any ongoing costs. And on September 22nd, AMARC finally reported that its 3 rigs had drilled 19 holes representing 7,000 meters. And all but one of these are step-out holes. The focus has been to go beyond the Aurora system to try and understand the zonation of this IP anomaly. And I think that the reason Freeport made the decision to go to 70% was because of what they were seeing in the core. They could see, Aurora is part of a very big system. Its nature is not yet understood, but they are drilling off a big system. They reported rush assays for 1 hole, which was a couple 100-meter step out, and it was, the copper grades were good. The gold was okay in chemist style, or even better than chemist style, doubled chemist style, but it wasn't as good as Aurora itself. But what we're dealing with is a very big system. So we'll be getting news flow from both TDG Gold and AMARC probably into January, and hopefully we see this major discovery flesh out and become more than the sort of couple 100 million ton footprint that we can see in the Aurora zone itself.
What will happen to the Yukon Favorites during the 6-month winter season?
Yukon goes dark during the winter, and no work is done in remote locations such as the Valley deposit of Snowline Gold Corp or the Rye prospect of Trifecta Gold. Now, back in the diamond exploration days, the darkness of winter was actually the place to get your hopes up, because in the tundra of the Northwest Territories, it's all barren flatlands. Most of the targets would be under lakes. The lakes would be nicely frozen. You park your drill on it, and you drill your holes. This would be the time to do it. But in Yukon has wonderful topography, mountains, hills, everything. Access is remote, difficult. You just don't get to do any sort of winter exploration program in the darkness with snow blanketing everything. So this is always the big dread for Yukon is, okay, when November rolls around, they won't be back at work until June or July. Now, that isn't the case for all the companies. As Sitka Gold has demonstrated, it can start work as early as March, February, March, after shutting down in November, because it's close to the Keno Hill district, where there is infrastructure and transportation access. Now, Snowline, it's up 39% since I added it to the favorite collection on July 8th after it published a PEA, which showed us what the fundamental value of the Valley deposit is. And when you plug in the current price, this is very, very undervalued. So even if they have to shut down in the next month and not do anything further, I think the stock will keep trending up as the market becomes more comfortable with $3,000 plus gold, and heaven forbid if it starts to challenge $5,000. But the wild card with Snowline is that they have had an exploration program going on its large rogue property, and if they make a valley-style discovery with similar grades somewhere within the rogue project in eastern Yukon, that will be a big deal because, yes, it will help Snowline, but it'll also signal that Valley, pardon the pun, is not a rogue phenomenon, a one-of-a-kind system, that the Yukon portion of the Tombstone Gold Belt does have this sort of high-grade, reduced intrusion-related gold system type potential. Now, Sitka Gold is up 189% after reporting excellent results for its Rose Gold project at the RC project. And the reason this is important is that these nice grades above 1 gram per ton, they start at surface. Last year, the market got excited when on the Blackjack, they drilled deeper beyond the open pit limit. They started to get these valley type, 1 to 2 gram per ton intervals. But that's deeper, that's lower grade. Valley is going to be a big open pit operation, which is what makes it so valuable. But the results, the news flow coming out from the Rose Gold drilling is showing the market that there is good grade open pitable potential at the RC project, not this lower grade stuff for which a resource already exists. And because the location is such that Sitka can drill, for at least 9 months of the year, I think with the news flow stretching into 2026, I don't think Sitka Gold needs to take a hit because there is this Yukon winter darkness that descends upon the Yukon area. So I expect that one to keep trending higher as we start to see more and more of this drilling results on the Ross Gold. Now, Trifecta's up 36% after reporting disappointing results from the 2 holes that drilled into the blind GC anomaly on the Mount Hinton project. And there weren't really any high hopes for that. It was a long shot drill play. It could have been a buried intrusive that spawned the gold silver veins that radiate off to the west. But the stock perked up after they drilled those holes because at the Rye project, they drilled 6 holes, and 2 of them, the first and the last ones, have the best potential for delivering discovery news. But they won't have assays until the second half of November. So that makes them vulnerable to worries about, well, what are the results going to be? What are they going to do in the subsequent seven months of no activity? And they're also exposed to whatever Rackla Metals comes up with on its grad project, which was very heavily promoted. They have intersections that visually look good, but until you get the assays, you don't know. If the market is unhappy with the Rackla results for grad, it will also have a negative fallout for Trifecta. Now, Trifecta, the Rackla results are due any day. And if Trifecta gets hammered because they're not great, then it has a chance to rebound, and hopefully its own Rye project delivers the results to keep it going. But if the results for Rackla are good, that, of course, will help Trifecta. So Trifecta is vulnerable. If it manages to have disappointing Rye results, it can go back to the Mount Hinton gold silver vein system. In the past, they've pecked away at it with these small strategic notes, with these small programs. In this new frame that I was talking about earlier, the money is going to come available for projects where you can see what's going on. We're going to delineate this. We're going to chase the long strike. We're going to chase it down dip. We're going to show how much there is. And there's the Hecla mining operation next door. So if it doesn't turn out to be multi-million ounce gold system, that's okay. Whatever we do come up with, it will have an exit strategy. So that's going to hopefully keep Trifecta alive because they still have $3 million working capital. They don't have to try and finance in the darkness of the Yukon winter as they had to try to do last year. And Silver North is up 210% as it drills the main fault discovery at Mount Haldane, and it needs to demonstrate that there is down dip extension to the wonderful grades that they hit last year, and also a long strike. And they need to show that enough numbers, enough intersections, so the market can say, okay, here's a body of 100,000 tons and all that, and yes, it is a lens within this fault structure, and this is great. This is a wonderful start. There's probably more of them along the whole structure, just as there are in the Keno Hill district, but they haven't really had anything to say since drilling started August 15th. So that's it's now October 1st, and they're overdue for news, and they will be vulnerable if they don't deliver anything to that Yukon winter because of the topography, they cannot get back in there until June, but they can kind of drill in there until November. So there is still about 4 to 6 weeks left during which they can pull a rabbit out of the hat, but the stock is vulnerable to a sell-off.
Is it time to get long the prospect-generator-farmout juniors?
Eagle Plains Resources is up 74%, while Silver Range Resources is up 44%, admittedly from low prices. Almadex Minerals is only up small, it's actually down 2%, but I only recently added it after it got promoted from the bottom fish collection where it had delivered a 268% gain. Now, Silver Range and Eagle Plains, they specialize in farm outs to resource juniors, which are typically these lifestyle juniors, which know how to promote. They don't really know how to generate a project. So they go to prospect generators like Eagle Plains and Silver Range to auction a property, raise the money, and drill it. And in a bull cycle, this is great because all these lifestyle juniors, they can raise money. The farm out company can spend it, operate the program, make sure it gets spent intelligently. And you have a half dozen to a dozen of these farm outs going. One of them is going to hopefully click and deliver a discovery. But the bear market, this decade-plus long bear market, has really demolished the farm-out market. And as I said earlier, we are not yet in a rising tide lifts all boats type of market, the kind that really makes the lifestyle juniors flourish. So one might argue that it's a bit early to buy these prospect generators. Yet in September, and I've already owned Eagle Plains for many years, but in September I bought a position in Silver Range Resources. So why do that? Well, in the case of Eagle Plains, they have $8 million cash and about $2 million worth of paper from juniors that farmed into projects, and they might actually get some liquidity as this bull market awakening continues. Eagle Plains has a history of every once in a while drilling one of its 100% owned projects where it thinks there might be low-hanging fruit. But it only does that when it knows it can replace the money at a decent price. The price has not been decent in the past couple of years. They drilled Vulcan in 2023. They got sniffs in that, but they did not get the Sullivan-type discovery that they hoped for. They wanted to go in and do some more work, but bang, they ran into some First Nations permitting obstacles, so that's sitting there going nowhere. And because of this glass half empty attitude, which in some cases was like glass nearly empty, it's been really difficult to get these exploration farm-outs going and get these juniors raising money and getting some sort of profile that allows the insiders to dump their stocks as they pump the story. That is going to change going forward. Now, Silver Range has only $3 million, but that's quite recent. Last year, they were operating on fumes, but one of the juniors to whom they had sold a project that was private finally got public, and they had a liquidity event, and they now have $3 million. But $3 million is not enough for Mike Power to go and make risky scout drilling bets. So they still have to wait. However, they do have a stake in Borden Mining, which is trying to redevelop the Faro Zinc District in Yukon, which is a reclamation nightmare similar to what Alexco was, and that has been dragging on for years because of different First Nations groups can't get around to sign on the dotted line, and the latest delay is that some neighboring band which suddenly claims to have overlapping territorial rights, and this is a problem with Canada. UNDRIP handed all of Canada to its First Nations, but the problem is First Nations as a group claim 400% of Canada's landmass. So you have these problems between these different bands. Ottawa is trying to solve this problem right now, and there is hope that there will be a breakthrough. If there is a breakthrough and Borden ends up public, it's a redevelopment story, it's a reclamation story, and that interest that the Silver Range has will be worth $10 to $20 million. And if it can get this liquidity event, all of a sudden its cash, its treasury is similar to that of Eagle Plains. And Mike Power, even before the August 31st BLM fee payment date rolled over, which is when everybody else rushes out in the field, he has been strategically staking projects in western United States with an emphasis on Nevada. So he's going to have a wonderful portfolio of projects, again, which require rethinking. And in fact, one of the ones that they sold 100% to Trifecta, huge one, which they drilled some money, this one is also a potential fallback story for Trifecta because it's an orogenic system, which is not the usual epithermal system you find in Nevada. But when you look at it from the new frame of $3,000 gold, this thing you can raise the money and drill it deeper. So I bought Silver Range because I think that in 2026, they will be in a strong position to do farm outs and to even drill scout holes on some of these prospects that Mike has generated. And as far as Almadex Minerals is concerned, they've been drilling at the Paradise Valley project in Nevada. The market didn't like it that one of the first vector holes from this season didn't deliver. That's not the point. If it delivers, that's the miracle. What they're really building is a geological context so that a major feels compelled to farm into it and spend the gazillion dollars needed to find a major porphyry system or even a intermediate to high sulfidation gold system underneath a lithocap. And Almadex has the benefit of a $20 million treasury, so it can do this process of drilling these, 2 to 4, sometimes 6 scout holes to upgrade their prospects, because the new reality is that stuff outcropping on the ground, it's all been banged. It's going to be more subtle outcrops, alteration, halos, and things like that, which to demonstrate there's something interesting there is going to require drilling. And that's not a game for the little lifestyle juniors. That's more a game for the producers, the majors, who have the deeper pockets, which are going to be flush with cash if gold stays above $3,000.
When will laggards like Colonial Coal and Inventus start moving?
Well, Colonial Coal is down 21% as the market waits for an Indian, Chinese, or Japanese steel maker to become interested in acquiring the Flatbed and Huguenot metallurgical coal assets in northeastern British Columbia. And but the global chaos that Trump's trade tariff policies have created, and also all his bellicose talk about annexing Canada and Greenland and this sort of stuff, that has created a high degree of caution as all these other nations sort of try and figure out where is this all leading to. So Colonial Coal is just sort of floating there, waiting for somebody to get off the sidelines. Now, the proposed Anglo-Teck merger throws another monkey wrench into the story, because now they're wondering, is Ottawa going to allow this? Now, I agree with Ottawa's insistence that Anglo-Teck should be headquartered in Vancouver. I mean, they're dumping the American part of their name. They're not really an Anglo company anymore. And if it inherits all the Canadian tech personnel and infrastructure, this would be good. Even though it's an international company, have it headquartered in Vancouver, which was originally the Vancouver Stock Exchange, where all the new discoveries were made after Murray Pezim abandoned Toronto and discovered Hemlo in 1982. Do you buy and hold Colonial Coal? The thing is, when an auction starts for this asset, it will be fast and furious. It will be at somewhere in the $5 to $10 will be the outcome. So this is one, you kind of buy it and forget about it and hope that something happens to spur the buyout action. Inventus Mining Corp, I added it not too long ago because of their Pardo project. It's up only 21%, and it's kind of stuck right now because they've delivered several bulk samples from Pardo to the Black Fox Mill of McEwen, and they're supposed to be processing in September already, or even in late August. But there's been some technical problems, and now it's mid-October before this 2 to 3 day run to process the bulk sample can happen. So the stock is kind of in limbo, waiting. Now the grade control drilling says this should produce some pretty good results, and the bulk sample, of course, it's needed to validate the protocol for doing a resource estimate for this paleoplacer system, which has a significant nugget effect, which is what you expect from a placer system. And it's also important because they get to keep the gold they recover from the bulk sample and sell it. So the market wants to see this first bulk sample deliver the expected gold from the grade control drilling, which pays for the cost. And so then you have this perpetual funding machine where every month you get this done. Now, the company doesn't profit from it because it keeps spending the money, but it builds the basis for doing a resource estimate, which will allow for what will likely be a coal seam-like underground mining plan, and the goal is to find 1 to 2 million ounces in it. This is one stock that's on my short list to buy sooner than later, because I think once we clear this milestone of what does the first 5,000 ton or equivalent of bulk sample deliver, this stock will start trending higher because the market will expect all the rest of the samples to deliver similar results.
Why do you call Nevada Organic Phosphate a Lazarus Resurrection story?
Nevada Organic Phosphate has the Murdoch Mountain project in northeastern Nevada, and in September last year, they were supposed to get the lease application approved and get a drill permit, but the BLM, which is in charge of phosphate leases, which are like coal and potash and oil and gas leases, and not like the metallic leases, it just dragged its heels. Part of this deny and delay health insurance type strategy that these permitting agencies, who still seem to be under the thumbs of the NIMBY lobby that wants to preserve America as a pristine wilderness preserve where absolutely nothing happens, they dragged it on. And so they bit the bullet, wanted to get going in May, because between November and April, this is supposedly a sage grouse nesting season, so you can't do anything that might make noise. Never mind that the Union Pacific Railway goes past there with this rumbling noise, which is not exactly the soundtrack that the sage grouse want as they do their pole dancing in their leks. So May comes along, and the Wildlife Agency screwing around saying, "Why are there no grouse here? This is bad. Must be because nothing has been happening here. We must make sure that nothing keeps happening." It was insane. And they finally got the permit on September 15th or something, 17th. And of course, they had like a couple weeks to raise the money to do the drilling. So Robin Dow bit the bullet, 5-cent unit financing, half warrant, $1 million. Well, this story has attracted a lot of attention because it is a potential scalable supply of organic phosphate, and it's deliverable. The railway goes right there. You could transport it anywhere in America where an organic farmer wants to cultivate organic crops. Now, you're not going to cultivate organic corn or soybeans, but for fruits, nuts, and vegetables, people do like it to be organic. And it also has appeal to the whole MAHA movement, the Make America Healthy Again, which, although there are lunatic components, that covers the political spectrum. And everybody pretty much agrees if this exists, this is good. So they announced that it had been upgraded to they upsized it to $1.8 million. They closed $1.3 million on September 26th, and they may have ended up raising $2 million by the end of the day. Drill rigs have been mobilized. They'll be drilling. They'll have about 3 weeks to get this done, these 12 holes. And the key milestone here is drill into the fresh beds, demonstrate that the heavy metal index is as low as it was with the weathered rock. Otherwise, you have no organic story. And then start, stitching it together, see what the continuity and grade consistency is. And we will know by the second half of November whether this story is live. But if they had not got this permit, they would have had to sit again until May of next year with no news story. So the permit was like a resurrection of what was looking like another Lazarus. I've given a $100 million target outcome because this is a story similar to Verde Agritech in that it's you just grind up this whole rock product and apply it directly to fields. It's organic. It doesn't have the leach into the system the way, say, potassium chloride does. And the thing is, we don't know how big this market is. Verde Agritech was about displacing Brazil's heavy import dependency on potash with a domestic supply that also wasn't as harmful on the fields as the salty potassium chloride. In this case, the market still needs to build. So it is, it could end up being a $500 million market, but I said this maybe just a $100 million market. When you look at my IPV chart, the stock is in S-curve territory, but we recently added a tool to the profiles of every company in Kaiser Research Online where you can pick the project, input 500 million, 100 million, and see what the IPV chart looks like and what the target outcome down the road when it's ready to go into production would look like. And I did that with the $500 million outcome, and the 9-cent stock price is within the fair speculative value range. And this is what the S-curve is all about. Somebody is thinking 500 million. I'm thinking 100 million. This is why you see this range of valuations during the discovery delineation stage. If the $500 million outcome starts becoming real, and this is with 156 million fully diluted, you're talking a $3 potential outcome, something that might actually be reached during the S-curve period as the story starts to become real in the minds of the market. So it's Nevada Organic Phosphate is like the bottom fish or the favorite to watch in the next 6 weeks.
Does VR Resources deserve to remain in the favorites collection?
VR Resources is the worst performer in the favorites collection, down 67%. It does not have much money left. Management has had nothing to say since reporting disappointing results in late March for the winter drill program at Silverback in Ontario. Since then, none of the management has reached out to me to update it. I've left messages. I don't get calls. This company is in shell-shocked bunker mode. Supposedly they're trying to farm out their Nevada copper and gold projects, but I heard that story 2 months ago. With the huge amount of stock offered at 2 cents, this looks like somebody knows there's a rollback coming. At the moment, I'm not optimistic that this company will redeem itself. It could change. Management knows how to tell a good story. I think their Nevada projects are interesting. I think even Silverback, when you look at everything from the fresh frame that $3,000 plus gold provides, could attract the audience again. But right now, the ball is in management's court, and I say it's best to wait for Jesus to pay this Lazarus a visit.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.